Yeah, so when we look forward to the outlook, I mean, from our point of view, while we understand that, there are many companies that are depressed and haven't done well, and that a number of our investments have done well, our view is to continue to focus on companies that will be better off in a post-COVID world. Look, we recognize these companies that haven't done well could, in theory, bounce back if, say, a vaccine was found or if we effectively learn to live with COVID. And all of those look, we can completely understand why people look at them. That looks like interesting ideas, but ultimately they're just a trade. The trends that we're talking about here are going to run for long periods of time. The demand that has been pulled forward, in our opinion, is not adequately priced into a number of these companies. And so from our point of view, when we think about the outlook, I think you've got to think about how much money these companies could make in the future. And in many cases, they're still really just at the start of taking market share. A good example here would just be e-commerce. It took 20 years for e-commerce to go from 1% of retail sales to 20% of retail sales, yet it's taken just 10 months for it to pick up another 7% of share of retail sales. And even then, by next year, it'll still only be 30% of retail sales. And so from that point of view, we do see these runways of what we're talking about, not only being pulled forward, but there's still a very long runway of spending in front of them. And so from our point of view, now that the changes happen, I think the market's probably underestimating how permanent it is. And so from our point of view, our view is to stick with these winners and to stick with the outlook for the fund. And so the outlook going forward, we hope, should be very similar to the one we've seen previously.